This is your technical update from the LMAX Exchange Research and Analytics Desk for Thursday, October 8th, 2015. Euro dollar. So the euro continues to chop around with the market showing no clear directional bias at the moment. At this point, though, the broader downtrend remains intact and a break below 110.87 is favored, below which exposes an acceleration towards that July low at 108.09 further down. At this point, key short-term resistance comes in around 13.20, and a break back above this level would expose more significant short-term resistance at 14.67 further up. Sterling dollar. So an impressive recovery in sterling dollar over the past day, with the market trading up above 153. But at this point, the market is classified, these rallies classified as corrective, with a lower top sought out somewhere ahead of 155 in favor of the next downside extension, eventually below 150.90, that support that we see going back to May, and towards psychological barriers at 150 further down. At this point, though, only back above 156.59, that high that we saw going back to the 18th of September, would negate the current bearish outlook. Dollar yen. So dollar yen has been locked within a consolidation. The market is showing signs of potentially trading lower, with a lower top now sought out at 21.74, ahead of a resumption of declines all the way back down towards that extreme low from August at 116.12. Euro Swiss. So Euro Swiss remains locked in a consolidation, though the recovery structure remains intact here, and the market is favored towards the upside above 110.50 and towards 112 further up. At this point, only back below 107.14 would negate the recovery outlook for Euro Swiss. Aussie dollar. So Aussie remains confined to a longer-term downtrend, though the market has seen a bit of a recovery in recent trade. At this point, though, while the market holds below 72.80 on a close basis, the pressure remains on the downside, and the market is expected to roll over again in favor of resumption of declines back towards those recent multi-year lows at 69.08. Ultimately, only a close above 72.80 would force a shift in the structure. Dollar CAD. So dollar CAD has seen a sharp pullback over the past several sessions after trading up to 11-year highs at 134.57, but the market is now expected to find a medium-term higher low somewhere around the 130 area in favor of a bullish resumption. Look for Wednesday's low at 129.72 to hold in favor of that upside back towards 34.57 and beyond. Ultimately, only a break below 128.60 would compromise the constructive outlook. Kiwi dollar. So Kiwi has seen some impressive gains over the past several days, with the market extending all the way up towards 66.50 on Wednesday ahead of the latest minor pullback. At this point, a lower top is sought out below 67.40 ahead of a bearish resumption back down towards that multi-year low from August at 61.30. SPX 500. So the S&P 500 has been chopping around over the past several days, though a lower top is now sought out in the 2022 area ahead of the next downside extension back towards that August low in the 1830 area. At this point, only a close back above 2022 would compromise the newly adopted bearish outlook for the S&P 500. Gold. So gold has been impressively recovering over the past several days after the market put in a multi-year low at 1073. Look for a higher low now in place at 1100 in favor of the next upside extension beyond 1170, which will expose 1233 further up. At this point, only a break back below 1100 would compromise the constructive outlook for gold.